Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate and finance expert Deb Smith. Now, Deb is a co founder and CEO of the CenterCap Group, boutique investment bank providing strategic advisory, capital raising, and consulting related services to private and public sector companies and fund managers across the real estate industry. Now, CenterCap is the first female-founded boutique mid-market iBank solely operating in the real estate space. Now, Deb brings with her 20 years of experience in corporate M&A, real estate, and niche asset classes. Deb also has extensive experience and brings a unique perspective on emerging trends, contrarian investments, and adjusting to the ever-fluctuating markets. Deb heads the firm's strategic capital and M&A and execution, and she also sits on the board of a publicly traded REIT, she's one of the very few women in this position. So without further ado, I'd like to welcome our guest for today's show, Deb Smith. Deb,
Thanks.
how are you today?
Thanks. Thanks for
Yeah.
having me on the show. But
Yeah.
when you rattle all of that off, I feel very old all of a sudden.
No, that's just that's a lifetime of experience right there. I'm excited to dig into it. I'm excited to dig into it because there's quite a bit there. Pretty cool story of your founding of CenterCap, especially during a time when just not a lot of exciting things were happening in the world. I mean, everything seemed to be in turmoil, and so excited to go down that road and learn a little bit more. But before we go there, Deb, for those that aren't familiar with you, they don't know your background, your
Mhm.
story. I gave you just a very brief introduction there, but surely there's a lot more to it than that. So why don't we back it up a little bit and
Mhm.
tell our, have you tell our folks in your own words a little bit more about yourself and ultimately how you found your way into this real estate finance world.
I think, with similar to a lot of people's stories, I've been very fortunate in being in the right place at the right time for much of my career. I think if you had have asked me graduating from college whether I'd be sitting here today having a bank, that co-founding a bank in the middle of the GFC in 2009, I probably would have laughed at you. So, but it has taught me to appreciate every opportunity that comes along and to always explore them, even if it's the least you expect. It's, you never know when a good opportunity comes your way. I came from Australia back in the late 90s after graduating from college with a law degree, no less, with Morgan Stanley, and have been here pretty much ever since. I've been a career investment banker. I think I was probably the least likely in my class graduating from law school to actually go into investment banking, let alone stay in it. And yet here I am 20
Here
years
you are.
later, still doing it. I still love it. And I don't think my family knows any more about banking today than they did when I started. So it's like, it's
Isn't that funny?
yeah, I've been doing this a very, very long time. I've been fortunate to come from very humble beginnings. I grew up on a dairy farm in Australia and, was just fortuitous in going to college, and which was never an expectation, and then
Mhm.
graduating from there and not really traveling overseas, and then somehow finding myself into the United States, into New York. It's
Mhm.
all just being in the right place, right time, and paying attention. And I think that was similarly the genesis with behind CenterCap when we started in 2009. It's, well, why don't we give this a whirl? Why don't we give it a try? And it's really just a consequence of what could possibly go wrong. It's my mantra in life is that I'll figure it out. Whatever comes my way, I'll figure it out, and it's going to be just fine. And when you have that attitude towards things, it means you're willing to take more bets on yourself,
Mhm.
because you'll figure it out even if it doesn't work out. And I think that's propelled my life in general and has certainly put me where I am today.
Yeah, I love that. I love that. I mean, isn't it true that the biggest successes in life, generally speaking, are when there's a problem. The who finds the solution to that problem is the who creates the wealth, right? I mean, so like, case in point of kind of your story there. Like, I'll figure it out. I'll figure it out.
I'll figure it out.
I'll find a way. I'll find a solution. And ultimately, fast forward and look where we're at today, right? So, but I want to, before we fast forward too quickly here, I want to back it up a little bit. Would love to talk to
Mm-hmm.
you, talk with you about your time at some of those larger financial institutions. I know that you were at Lehman Brothers for a period of time,
Yeah.
Wachovia, Morgan Stanley, I think a number of others as well. But just
Yeah.
really, more specifically, just maybe some of the experience that you gained, the valuable experience that you took away that really helped you in launching CenterCap back when you did.
So when I first come over as a loaner for Morgan Stanley, I was supposed to be here a year and then head home.
Mhm.
And then I ended up staying. I worked in the power utilities group. I'm actually a utilities banker by background. And I had a phenomenal experience at Morgan Stanley. It was absolutely phenomenal. I cannot say enough good things about my time there and my professional development. And when I moved over to Wachovia, it was to try something new. I wanted to move into healthcare banking, try something new. And it just right place, right time that for folks who are listening and paid attention to the public markets, the year was 2005. Well, that was the height of the go privates REIT M&A of all time was back in 2005 through to 2007. And so my great intentions to do healthcare landed me on working on Gables, which was the first public go private I worked on. And the rest is history. So real estate was not on my radar at all, at all. And I was like, well, let's give this a whirl. How hard could this be? That's my next line. How hard could this possibly be? And so I took on my first, the rest is history. I ended up moving and focusing 100% of my time on real estate and then moved to Lehman to do exactly the same thing. And then after the announcement of the Archstone Smith deal, moved over to co-run the global M&A effort for CBRE investors. So all of those things, I wasn't really looking for any of those opportunities. They kind of showed up. And I just took the risk to give them a whirl and see how they pan out. And, nothing is ever forever in this world. And so people, if you're ambitious, take a little bit of risk on yourself and just assume you'll figure it out when you get there, because how hard could it be? That's my next slide.
That's
How
right.
hard could this
No, I
possibly
love it.
be?
I love it. So, well, let's talk about that. How hard can it actually be? Where were you at when the music stopped? I guess whatever the day that we can mark as the day that started the GFC, where were you at?
That's
Were you at Lehman Brothers, or you'd already moved on?
I had moved to CB, and that's
Okay.
what the really interesting thing is that, at the Lehman collapse, I had already moved over to CB. Again, right place, right
Good
timing.
timing.
Yeah, the opportunity came in. And I think actually when Bear Stearns collapsed, I was in Australia on vacation, and I kind of everything was fine when I left, and when I come back, nothing was fine. And so it was the beginning and the beginning of the downturn there. But I think, it caught a lot of people by surprise in the sense that, wow, this is really happening. And I remember at CB, we had raised the largest value add fund in 2008 at the time. And yet they were managing, probably 40 billion or so of AUM in 2008. And so, we'd be spending our mornings thinking about how to put out capital, and then you'd spend the afternoons figuring out how you were going to deal with projects that weren't going the way they were supposed to. And at that time, we were one of the few independent groups in the firm, and they were not dedicated to an investment program. And so we were also the logical group that if you needed to have some independence, or you needed to bring in an outside group to look at things, we would tag for that. And that was, whether it was in the job description or not, I mean, we were, REIT bankers, and we'd moved over, and we certainly learned how to think like a buy side investor, somewhat being thrown in the deep end. We had a fabulous CEO at the time of the investors business, and they had a fabulous team. And they took some risk on us, and I think we delivered. We did a good job. But again, with all of these things is, you answer the phone and have the attitude of how hard could this possibly be? I'll figure it out. And I've realized over time, I enjoy that. And it's probably one of the reasons of being successful. One of the key ingredients is a willingness to step outside of your comfort zone, but assume you'll figure it out. There's just an assumption I will get through it and I'll get it done. And I don't think, a lot of people want to take that risk on themselves, but I think it's a core characteristic if you want to be an entrepreneur, that to just trust your intuition and go with it.
Yeah, I think what's the old saying of get very comfortable being uncomfortable, right?
That's right. I think there's definitely merit to that. And I think, as we've gone through our business through to today, and I look at its evolution from where we started and the way we've grown it and the way we've built out our services, I look back now and I couldn't have designed it any better if I had actually had thought about sitting down and designing it. And it's evolved on seeing the opportunities and seeing what's out there and saying, well, what about, and being able to sort through things that have come in and say, well, this is a good opportunity, but this isn't. And being able to listen from, lessons learned and things that have worked and things that haven't worked, and taking all of that in and throwing it all in the mixing bowl with the new opportunities. And we end up where we are. And I couldn't be prouder of how the business has evolved or our position in the market or what we've been able to achieve.
Well, that's fantastic. I appreciate you sharing that. So let's talk about that pivotal moment from CBREI to you stepping out. Again, getting
Mm-hmm.
uncomfortable to a certain degree,
Mm-hmm.
and realizing that there was a vacuum in the market or a void in the marketplace. There was
Yeah.
what you considered to be an opportunity of sorts for you to step out and do your own thing. So talk us through that pivotal moment. What did that look like, and what was really the catalyst?
Yeah, when we were at CB, we had learned to take our REIT experience and position it and look at it from a different perspective. And in doing that, we're also given the opportunity to build out a greater number of relationships, to be able to analyze real estate as an investor and not just as an advisor.
Mhm.
And we learned from all of the banks that covered us that they really didn't understand how our business worked. And that's what we really learned. And I will put, ourselves in that position when we're on the banking side. We thought we knew, but it turns out we really didn't. And once you are in that side of the fence, it gives you a whole new perspective, and that stayed with us. And I think if over time, what I've begun to appreciate is that when we talk with clients, the type of dialogue, what we say, how we position, the level of insight is different than what I would have given if I had stayed at a larger firm and
Mhm.
just advised on retails. It's
Yeah.
I see the world very differently now. But more than that, I'm willing to take more risk on the advice I give, um, and the comments that I give. And if someone asks for my opinion on something, they can ignore it. But if they have asked for it, then I'm willing to give it. And
Hmm.
and then it's your choice what you decide to do with that advice. There's no harm, no foul if you don't want to take my advice. But I've learned to take more risk and have a higher degree of confidence in my views, and what I think is going on in the market, where I think it's going, and the types of opportunities we should be working on, the types of people we want to work with.
Yeah, no, I mean, would you state that, the reason for that? Obviously, you played both sides of the table. On the traditional investment banking side, it's fairly black and white. I mean, the confines of that box or the parameters of that box are pretty tight. Whereas on the entrepreneurial side, on the other side of the table, I mean, there's got to be leeway. You've got to be willing to pivot, and things get gray sometimes. And so, just being able to wear both of those hats. I mean, is that what you mean by just
Yes,
understanding from both sides of the table? I mean, just really
yes.
kind of, you can kind of look at it through both lenses and understand the full picture. Whereas typically, again, however, I do think, I mean, would you disagree with the statement that, surely I don't have an investment banking background. I understand it. I understand the premise of what happens in that world. But I feel like I probably understand it more being on the entrepreneurial, on the real estate side, than that of maybe the banker understanding
Hmm.
our side of the house.
Yeah.
Is that an accurate
I think
statement?
that's right. I think that's absolutely right. And it's a little bit, when I was a first year analyst, I thought all first year analysts were kind of the same. And as you get older and you become more senior, you realize no, they're not. There's definitely different qualities of analysts and different qualities of people.
Hmm.
And so I've learned over time too that my perspective, or our team's perspective, when we advise our clients, is at a different level, and a different level of depth and quality than I believe others can provide when they haven't walked in those shoes, when you haven't been on both sides. And as an entrepreneur, I also understand where other entrepreneurs or owner operators or folks that built their own businesses, I know where they're coming from. I
Hmm.
understand it because I've walked it. And so
Yeah.
I'm not dismissive, as if they're a hired gun, and they're just someone that's hired to sit in those shoes. And I give the advice, and the advice we give is on the merits that it's their money, it's their capital, it's their futures, and what that means. And so we take that very seriously, and I think it gives you a level of connectivity
Hmm.
towards them that is hard to replicate if you haven't been in that position before.
Yeah,
And,
I
and I've
agree.
learned to value that. I really have learned to value it over time. And so conversations, we publish a lot of pieces on research pieces, and we put ourselves out there. It's not well, it could be this, it could be that. On the hedging, this is our opinion. And I've written about it because this is what I think. Now, you don't have to agree with me,
Right.
but I am prepared to take a position on things. And I am prepared to put my thoughts out there. And if I'm lucky, people find them insightful and they actually agree with it, which is great. It's always nice
Yeah.
when people agree,
Yeah, sure.
so I'm not entirely on an island when I come out with something.
So I think I asked you the question, but I think I buried it because we went down a different rabbit hole. So I want to know about
Mhm.
the again the evolution of center cap, but
Yeah.
really about that pivotal period of time. Was it 2009? If I recall.
2009. Yeah. So
Okay.
we started out in
Okay.
2009. And I'll be honest, I mean, it's not like we sat down and said, well, today we're going to start an investment bank. That's what we're doing. That's not what happened. I mean, the reality is we knew what we knew. And we thought, because we hadn't been entrepreneurs, we had just worked at firms before, right? We were a couple of women in our 30s with some kids in tow on both sides. And we thought, we got a call from a good attorney friend of ours, and they recommended that, an investment manager could use our advice on structuring a deal. We're like, okay, well, we'll
There you
give
go.
this a little
Yeah.
bit of a whirl. Let's give it a whirl. And then the next thing is, I am a lawyer by background. So it was like, well, okay, well, now they have to pay us. So I need a bank account. Well, I'm not going to start a bank account unless I have a company name. And the next thing another potential client gave us office space and a couple of desks and a printer. So now we
Oh
have a
boy.
space. And the next thing we end up having we hire someone. And then we decided, we'll do our own broker dealer. Again, how hard could this possibly be? And so we decided to start up our own broker dealer on that basis. And so we took all of these steps without thinking too much about we want to create, the next massive boutique investment bank, as opposed to, well, here's an opportunity, let's take advantage of it and see where it goes, because how hard could this possibly be? And so there's a little bit of that. And I think, in retrospect, like I said, if I went back the moment to 2009 and I fast forwarded, and starting a business is hard, running a business is harder,
Mhm.
and building an advisory business is super tough. I don't know, with all of the things that we've gone through, it's been a great experience. But I could easily convince someone to say, why would you want to do that? It's just like, why would you want to do that? It's so much work and it is really, really difficult. And there's been many nights of not getting a whole lot of sleep, many days where, we were taking out the garbage and, doing our own analyst work, designing our own presentations and turning around and giving advice in the early days when we started. And then we took on a broker dealer and decided to do that. And I was the chief compliance officer of that for 7 years. I knew nothing about compliance. It was like, how hard could this be? And figured it out as we went along. We just figured it out. And now I look back, it has been an amazing ride. We've had so much fun. But it is much nicer being where we are today than what it was when we started the business, for sure.
Yeah, yeah, that's interesting. I mean, just to your point of, I don't know if you don't know if you would go do that again, right? I mean, just because there's been a lot of work along the way, but really at the end of
Yeah,
the day, I mean, it's been 15 years. You put one foot in front of the other, and it's kind of
correct.
it's like how do you eat an elephant one bite at a time, right? It's
That's right.
overwhelming if you think about like
Oh
going
my
at that
gosh.
whole hell elephant, right? It's not going to happen, right? Like overwhelming, you just shut the idea down right away, and so, but again to your point of just like you saw an opportunity, you guys put one foot in front of the other. How hard could it be? Let's figure it out. And it sounds like you had, a couple other, team members as well that were willing to have that same attitude and had that same attitude, and they were willing to just run at it heads on and just really everything, every challenge was an opportunity in your eyes. So that's fantastic.
Correct.
I love everything about it. So let's, center cap group, for those that are listening here, want to know what it is you guys, and you guys have a long list of services, and so maybe
Yes.
just give a general overview, but and maybe more specifically, so we can better understand, maybe in today's economic climate and where we're at in the real estate landscape, maybe share like some recent, you don't have to give specific details of who the
Mhm.
client was, but just some recent services that you've provided that would help us better understand exactly what your involvement is in this sector.
Sure. When we started out, we did a lot of JVs, as we chatted about,
Hmm.
and buying and selling, advising on investment managers. And at that time, it was a unique. There wasn't really many people working exclusively with investment managers on buying and selling. But given we'd been at CB, we knew that business really, really well. And that was our first kickoff into the space of starting our own firm, is to work on an opportunity like that. And as well as the JVs, because that's what we knew. Again, coming out of CB, the REIT market was dead. So there was nothing to be done there. And so that's where we started out, one deal at a time, one opportunity at a time. If we fast forward through to today, we have expanded that M&A business to work with owner operators. It works still a lot with investment managers, for sure. So we have that business operation there. Again, it's a very specific, unique focus within that market. We have a big capital raising business that does JVs, programs. It now does separate account fundraisers. It does private placements, raises discretionary funds. We've built that out. And that took more time because the types of investors that go into funds or SMAs are very different than what you would ordinarily have on JVs and programs. So
Hmm.
that had to be developed. And so we've built that out. And so that business is humming along as well. And then we have a very big consulting practice, which is something we really started spending a lot of time on a few years ago. And what we found is we don't really have any competition from the banks at all on that space. And I think part of that is because banking and consulting is very, very different, right? The consulting is more the McKinseys and the Bains of the world, and
Hmm.
your banking is our old stomping ground that we're used to. But the skills are very different in consulting because there's no transaction, right? And so if you're a banker that revolves around advising, designing, structuring, executing transactions, then you're way outside of your comfort zone,
Hmm.
working in an area where that's not on the table. And so that business, it designs, we've built out this year for a couple of different firms, investment management divisions. And we'll advise on product development. And so divining, it's going in and helping with companies, what their core competencies are, and then coming up with a product that fits the institutional market, that
Hmm.
works for their expertise. It has a piece where we can advise on, and this is common for us, a CEO comes to us who probably founded it and says, I got the company here, but I don't know if that's going to get me there, and I don't know if I'm the right guy, or I need some assistance in what I'm supposed to do next to take it to the next level.
Hmm.
And what we found is that what got you here is not going to get you there. So a lot of times, if you're an entrepreneur and you've built your own business, that's not the same skills that in order to
Right.
get it to the next stage. And so sometimes that design involves reorganization of businesses, it design new types of products, moving people around. There's a huge amount of latitude and that we can, within that framework, we could have. But it is a very different skill set. But what's interesting about it is across all of the businesses, it comes down to our core competency is we're very good at deconstructing companies, figuring out what makes them exceptional, and then repackaging it or redesigning it in order to optimize the next level of objectives. And
Right.
part of what helps us do that is that we work with the institutional market as well as clients. So we could
Hmm.
work with insurance companies, work with pensions, work with these folks that provide capital, and we know the kinds of opportunities they're seeing. And so we work to thread the needle and coming up with the story. And particularly now, similar to '09, where so many managers have wonderful track records, it's not enough. You can't just have a great track record and think you can walk into an institution and they're going to allocate capital. They're going to want to acquire you. No, lots of companies have great track records. You have to have a story and that people believe in and want to buy into, that's unique and memorable, but is true to who you are as the character of a firm, because every firm is different. Every company has its own culture. And how do you capture that? And so they feel good about it, but gets them excited to explain their story. And that's what that business does. And so it's not easy to do. And I love it. I really enjoy it, but I've broken down a lot of companies. I've designed a lot
Interesting.
of
Yeah.
new businesses and new strategic plans for folks by able coming in to do that. And I feel, 100% of the time we come up with something that maybe that they hadn't thought of, or they're like, wow, it's looking in the mirror and seeing a different picture. And the picture you see in the mirror is better than one you thought it was. And that's kind of what we strive for, is creating that level of confidence and repositioning. And so you have something to say that is differentiated.
Interesting. So, given the change in the landscape, you'd mentioned there's plenty of still folks out there that have a great track record, but that's just not enough right now. Obviously,
Nope.
there's capital is being a little bit more picky
Yes.
today. And so, what give me maybe an example? Again, you don't use specific names of clients, right? But just
Mhm.
give me an example of maybe one of your clients that really stuck out. Like you guys really you position them in a way and their story was unique enough that allowed them to kind of rise above the others that had similar track records, but yet this one
Mhm.
really rose to the top and really got the light that it needed.
Yeah. So we have a lot of folks that come into us and they've either raised a family office or an RIA, one fund, and they want to move into the institutional market. And they've done well. But the reality is the high net worth market RIA channel is different kinds of deals, different
Mhm.
kinds of reporting, different kind of dialogue and expectations than the institutional market. And so usually companies have to go through a reset in order to position themselves into that institutional market. So what we will do, it's about creating and communicating who they are as a team, an organization, and getting to the guts of what they stand for. And so that's really creating, here's my track record. How do I substantiate that? And how do we make or feel or create a connection to what's behind that? Like, how did you get that? Like, how do you pick your deals, right?
Mhm.
If you've got a great track record, what did you do to get them, right? And starting to drill down on, is it something about their selection, something about their sourcing, something about their execution? Is it their policies and procedures or people they know? Do they have a specific expertise with certain types of government agencies or certain types of markets where, do they have a strategy where they know every single block in a market? And they've been
Mhm.
talking to the 90-year-old founder who owns a block on the
Right.
corner of A and B Street, and all of their deals are off market. So that's adding substance to behind her. Or maybe it's an ESG angle, or they're very focused on diversity. And so they're able to solicit opportunities that have a bend there that fits within their wheelhouse. And that's who they are, a DNA as an organization or as a company. How do you drill into that? Or do
Mhm.
they just have exceptional underwriting? Right? Is there a
Yeah.
way that they underwrite their deals? Is it very nuanced? So they're looking for three things on how they underwrite, or is it four things? How do you break that down? And a lot of it's really about getting in their heads, and you have to get them to talk a lot. Really getting into their heads and talking to a lot of people in the organization to start picking up threads and themes around how that organization is run and getting to its core foundation. And then it's our job to take that and bring it to the top and to elevate
Got it.
it so it stands out above all else.
Yeah, I can imagine with that. It's got to be quite a lengthy interview process that
It
you and your
is.
team
It's
go
work.
through
It's work.
just to extract it all. Just sometimes decades worth of knowledge that's trapped, right? And it's just it's second nature to them. It's just what they do
Yes.
and what they do well. But no one's really they've never not even
They don't
self-aware enough
even
maybe
think
to
about it.
fully identify like what that is that really sets
They
them apart
don't.
from the rest.
A lot
Yeah,
of them
I
don't.
love it.
A lot of them really don't understand how or what, they talk about, there'll be track record, or maybe they're vertically integrated, or, maybe they've been in the same market for a while, but it's really getting to the crux of what those
Mhm.
things mean. Well, okay,
Yeah.
what does that mean exactly? All right, let's talk about how do you translate that? And that's really what it's getting out of them. And that requires a certain expertise, a lot of patience, and some expertise. But from our shop, and I think what separates us even from the consulting firms that do this, is that we understand the industry, and we understand real estate, and we understand what the counterparty or the folks that have capital, those folks you're trying to get into, we
Mhm.
know what they've seen, and we know what their expectation is. We know what their partners that they've already allocated capital. So we have to come up with something that threads the needle and finds a place still within that universe. And you only can get to that if you really understand the industry we're in, and we understand like the 10 facets of housing. or we understand the 10 facets of industrial, and we understand where it falls in the risk reward spectrum. And so being able to triangulate into that, I think is a separating expertise. So the words we offer aren't empty, they have substance behind them.
Mhm. Per your capital partners, the institutional side of things, I mean, what at this point, at this stage in the game, I mean, where are they really looking to allocate their capital? What asset class is it? Is it industrial and multifamily? Are they the two primary ones that everyone's looking to allocate capital into at this point, or are you
Yeah,
seeing it?
with the exception of office, and actually, I'll not even say that. That's not quite fair. I think with all of the food groups, um, there are nuances in all of them.
Hmm.
And I think if you were just going to go out and say, for example, I'm going to do a value add housing discretionary fund, not interesting.
Hmm.
But if you say, well, okay, what do you mean by that? What exactly are you doing in that vehicle? Let's talk about what you mean by value add. Are you adding value through structuring? You adding it through changing the apartments? Are you doing it because you're buying wholesale and selling retail? What does that mean? And so being able to break it down and clearly articulate what you mean within that vehicle, I think lots of vehicles can get traction. It all comes down to the performance that you're anticipating, what your niche is, how you're going to get access to it, and then how that sits vis-a-vis the other folks that they have already allocated capital to, right? So if you
Yeah.
take housing, you have affordable housing, workforce housing, you have BTR, SFR, multifamily development. I mean, I can go on with what
Sure.
housing means. And I think there's always interest in housing, right? Because we know we have a housing shortage. There's
Hmm.
always interest in housing, but you have to give more than that. Is it geographically set? Is it a
Hmm.
risk profile, right? Or is it the type of product? And so I think you have to get very specific and then look at what else is out there. Because if you're trying to compete with other folks trying to get to the same capital doing the exact same thing, that's a lot harder than spending the time figuring out what your real niche is and your real expertise and competitive advantage, drilling down on that and using that to get in.
Yeah,
The
no, that's
second's a
great.
little easier than the first.
Yeah, no, that's great. I appreciate the insight there. I just, not to pivot too much here, but I'm just curious. You mentioned office. I'm just curious as to what you're seeing. Are you seeing any opportunistic, groups come in and look to, bring in capital for office opportunities? Those that believe that office will make a comeback at some point in the future, maybe not, pre-COVID comeback, but maybe better than what it is today, and there's opportunity there.
So office, I think, has been the unfavored sector since the GFC. And I
Yeah.
appreciate it gets a lot of coverage now, but folks that are in the industry have known that. So it's not new news
Hmm.
that the office sector has struggled. I think with every other asset class too, it's what do you mean when we're talking about office? I think it's been tarnished with such a broad brush
Hmm.
that up until somewhat recently, it's just been tarnished with a brush. Now I think folks are really looking at it and say, well, okay, there's Class A office in great markets that are doing just fine.
Yeah.
They're doing great, actually. And if you've got a Class A in New York, they're doing great. If you're trying to do, suburban 80s property, well, that's a different story.
Sure.
And so it all comes down to what do you mean? That I have had more one-off comments and inklings of interest on the office space from folks that are very well known in the market. That makes you think, well, at what point here do these folks want to step back in because the basis has readjusted that
Hmm.
it's worth taking another look at. But even for folks that are expressing interest in the office sector, and I think there are some, there's definitely folks that are expressing interest, even on the fund vehicle side. It'll come down to, well, what do you mean by that? What are you chasing?
Yeah.
Because I think the office conversion concept has been hard to execute.
Hmm.
And not every property, I mean, people will look at it and say, why can't we just do office conversions? Well, for a start, office, windows, they don't open. So that creates
Right.
challenges for multifamily. Maybe you can do self-storage, but it's the office plates and it's complicated
Hmm.
to break it down. But I think, people are always on, real estate folks are entrepreneurs. They will always look for ways to figure out how to take something that's old, and can we do something to make it new? Because that's what
Yeah. Why?
entrepreneurs do.
Why I think, I mean, just being the office and maybe less desirable buildings, maybe based on when you were built, maybe they're
Mhm.
80s vintage. But I mean, if they're in an irreplaceable location and one can buy it at a low enough basis, we'll figure something out,
Oh,
right?
you're starting to
They'll
sound like
figure
me. We'll
something
figure
out.
it out.
That's
But
right. They'll figure
that's where
something
it is.
out.
There's a lot of people having those conversations today. But I will say it is nowhere near mainstream. And
Yeah,
and you can't go out and say, I'm just going to raise an office fund. And that is tough to do. I think that
I'm
is
sure.
incredibly tough. But here's the thing, that's been tough to do since the GFC. So
Yeah,
it's not new
fair
news
point.
there. Yeah, I think maybe it's elevated in terms of what people are looking at, and people are really starting to dig down because office has to adjust even more. But there are a lot of office buildings that are really, really struggling, and there has to be something done. And I'm not sure people have the solution as to what that is.
Yeah. So switching gears here before we wrap it up for the
Yeah.
day, Deb, tell us about Center Cap over the next, what's the vision over the next 5 years? Any major shifts, any, new things coming down the pike that you guys are super excited about?
Yeah, it's we're busy as the opportunities come in, and figuring out how to continue to keep up with the pace, I would say, is
Hmm.
is our challenge. It's not lack of opportunity. It's there's so much opportunity, is trying to keep up. I think is the issue for us. I think we have a very unique capability on straddling public and private markets, which
Hmm.
not many folks really have. So we can talk from both sides. I think we have a unique capability of really understanding corporates. And so, at some point, do we look to go into our own fund management business and look at, particularly on the GP side, and making bets on companies ourselves? At some point here,
Yeah.
we get paid well to tell folks what to do with their corporates from both sides of the table. And, what point do we say, well, look, it's our time and maybe we should be doing this ourselves? So we continue to look at
Yeah.
those opportunities all the time, but it's always just there's so many hours in the day that we can get through. And we've certainly got our hands full taking, just trying to keep up with the opportunities we have in our hand in
Yeah.
house today.
It's interesting you bring that up. I was literally going to ask that exact question of, is that going to be something you guys intend to roll? Is there a plan there for you to step into a GP role and start doing this yourself?
Yeah.
Um,
Yeah.
yeah.
I mean,
All
look,
right.
it's our core, it underlines our core competency. If there's an expertise we get hired for, the number one
Yeah.
is that is probably it. That, and we know
Yeah.
thousands of people.
That's right.
So we know,
You,
we know
I would say
thousands
that
of
you're
people.
pretty well connected.
We know a lot of people, but we are very, very good at picking and underwriting who we believe are winners in this
Yeah.
space, that have something, that are good teams, they're good people, and they're good at what they do. And that's hard. It's really hard to pick
Hmm.
that as to who rode the wave of free money, versus who rode it and actually are good at their jobs. And when things are tough, they will be there. And how do
Yep.
you underwrite that? How do you determine that? And I can't say, I have a formula, and here's you, as long as they have these three things, then they're good. It's, but we are very good at breaking that down and spending time with folks, to the point where I think a lot of folks, listen to us on the capital raising side because they know we've vetted and we know we went through that effort, of breaking folks down. And I'd like to think that we have a reputation, for being able to work with really, really strong clients, that we feel have something that is differentiating.
Deb, I think you need to start a podcast. You're incredibly knowledgeable, and obviously you have a great amount of connections throughout the industry. I think that you need to start doing your own show as well. In case you need to add it, if you need to add one more level to to what you're already offering, right?
Well, here's my
you,
next
you got
thing
some
is,
free time, don't you?
well, that's my next thing. In addition to our other two statements, is add it to my list.
Yeah, add it to the list. Add it to the list.
Add it
Well,
to the list.
Deb, this has been so much fun. I really appreciate you coming on the show. For those that are tuning in here, they want to learn more about Center Cap Group and the different
Mhm.
services that you guys provide. Where is the best place to track you down?
Well, we have a website. Everyone can
Mhm.
check that out. We have a Senecap LinkedIn, and I also have one too. You can type in Deborah Smith Senecap, and I pop right up. But you'll see we post on there. When I see interesting trends, we write about them in our Senecap perspectives. And
Mhm.
that's usually on the back of information I've picked up, and I think it's a trend and it's going to take off. So you can check those out there on our website as well. And so I'm pretty easy to find.
All right. Fantastic. Well, Deb, thanks again for joining. It's been a lot of fun having you here today.
Thanks for having me on. Appreciate it.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.